Did you know? One digital art NFT has been sold for almost $70 million. A tweet sold as an NFT fetched close to $3 million. And an NFT representing virtual plots of land in a video game was bought for $1.5 million. Headlines like these have made NFTs all the rage, resulting in NFT sales topping $2 billion in the first quarter of 2021. There is no doubt that some people are making a lot of money off of them. But this doesn't make NFTs a prudent investment choice for your hard-earned money. Here are 7 reasons why you should absolutely avoid investing in NFTs. Number 1. The NFT asset could simply vanish. If the online location where the underlying digital asset is stored gets corrupted or destroyed, it could mean that the artwork or music or video that the NFT represents will be wiped out. This will result in the NFT completely losing its value. Imagine paying millions of dollars for an NFT only to see it randomly disappear. Number 2. NFTs can suddenly become worthless. Unlike tangible objects, NFTs have no real value other than what others are willing to pay for them. For example, even if nobody wants to buy your used car, you can sell it for its parts and get some money. But if people suddenly lose interest in a certain NFT, it will become completely worthless. Number 3. You don't really own anything. Usually, when an NFT is sold, the original owner retains the copyright. This means that the person who sold the NFT can create multiple copies of the asset and sell those as new NFTs. And the worst part is that all this is completely legal. So, other than bragging rights, there is no real value for NFTs that represent digital assets. Number 4. There is a high possibility of fraud. From minting NFTs by plagiarizing original work, to creating fake sites for swindling money out of your digital wallet, to artificially increasing the price and making unsuspecting buyers pay much more for the NFT than it is actually worth. There are all kinds of scam artists trying to make a quick buck from NFTs. All this is outright illegal, but it might take years for the courts to catch up and take the offenders to task. And even when they do, you still might not recover the money you lost. Number 5. There is a lot of volatility. Since the value of NFTs is perception-based, NFT prices can go up or down very quickly in this highly speculative market. And there is a good chance of losing a large portion or all of the money you invest in NFTs. Number 6. There is very little liquidity. The secondary or resale market for NFTs is not very active. Since each NFT token is unique, unless there is a ready buyer, it can be very difficult to resell. So if you want to cash out and get money for your NFT, it might not be quick or easy. Number 7. NFTs have a huge impact on the environment. A huge amount of energy is consumed for each NFT transaction due to the way blockchain technology works. This means transactions related to even a single NFT result in a lot of greenhouse gas emissions that hurt the environment significantly and expedite global warming. For instance, some research shows that on average, the carbon footprint of one NFT is equivalent to the electricity consumed by an EU resident in over a month. I hope you enjoyed this video. Don't forget to share it with your family and friends so they don't fall into the trap of NFT investment. And thanks for watching!